In this video, we're going to look at 10 tips to get our models to balance. Now, the best way to get a model to balance is do like I did in the first video, get lucky and type in all your formulas correctly. Then you'll see a 0 on line 72 and it will turn green. The reason it turns green is because it's 0 and we have a conditional formatting rule that says if the cell value is 0, then turn it green, and if it's not 0, then turn it red. So hopefully yours is green, but if it's not, let's keep going. The formula in there is the difference between both sides of the balance sheet. We take the absolute value just so we can see the number, and then round it to get rid of any small decimal places that may not be important, may just be rounding errors in Excel. So that's how we check our balance. But how do we get our balance? I've graded hundreds of models that students have turned in, and believe it or not all of them were balanced. So I'm going to go over the top 10 reasons why some of them weren't balanced. The first is, did we turn on the circular references? Remember that interest is a function of cash, which is a function of net income, which is a function of interest. So we get this circular calculation going on the circular references, and that's required for Excel to iterate its way around that circle until it converges on an answer. If we're on a PC, we can make sure that that's happening by going to File, Options, Formula, and checking for enabled iterative calculations. If we're on a Mac, it's kind of similar. We go to Excel, Preferences, and Calculation, and they use a little bit different word there. They say Use Iterative Calculation. If it's working correctly, you'll probably see the word calculate in the left side of the status bar. But if you go to File, Options, Formulas, and uncheck Enable Iterative Calculation, then you'll get an error that says there's a circular reference in your spreadsheet. It's not normal to have one cell eventually look back at itself, and that's what a circular reference is. So Excel warns us about that. So we say, okay, we know. And then we look down here and it says circular references, and it tells you where to start looking for them. And they even put the precedent arrows in there, formula precedent or formula dependent arrows, so you can track down and see where your circular reference is. But if you really want it in there, go to File, Options, Formulas, and check Enable Iterative Calculation. And then you don't get an error, you get the right answer. The second reason that models don't balance is if it gets infected, and we have a whole video on that about blown up models, so go watch the video. The third reason is maybe the previous year didn't balance. Sometimes students will bring in their historical balance sheet and it won't even balance. So if this number doesn't match this number, then why would we expect anything in future years to balance? So if we don't bring it in correctly so that we're in balance on both sides of the historical balance sheet, we can never hope to get in balance in the future. The fourth reason might be an error in the math on our assets part of the balance sheet. For example, let's say when I were adding up the total assets, I forgot to include the other non-current assets. Now I'm out of balance, and let's say I don't know why. I'm going to show you a quick way to find that, and then I'll explain it. So what I'm going to do is take the previous minus the current for not only cash, but for everything else that's an asset. I'm going to skip the subtotal and the two pieces that make up net PP&E, and then go to net PP&E and that last account. And that, when I've calculated previous minus current, essentially shows me the uses of cash on the balance sheet. The first line doesn't really fit that description, but the process works. Now I want to compare that to what was the increase in total assets. So the use of cash and the increase in total assets should be similar with different signs. If they match, I should be able to select all of these and look at the sum, and it should be 0. If it's not, maybe it's an indication of where I messed up. In this case, I see a 62 down here, and I see a 62 up here, and that's a big red flag that says, hey, did you pick up those other current assets, other non-current assets, when you were doing the math? So fix it there, say enter, highlight all of these, and I get 0. So the process works. Go back and read the verbiage on number 4 to see why. Let's try it on the other side of the balance sheet. If I had said equals previous minus current, and apply that to accounts but not subtotals, then I would apply it to those 6, and then come down here and do it the other way. Say current minus previous, and highlight all those, hoping that they'll be 0, and in this case they are. And that gives me a better feeling about my math on this side of the balance sheet. And that gets us through step 5, talking about changes in liabilities and equities matching the total. Now let's talk about number 6. Did you add a line item to the balance sheet but not the statement of cash flows? A great example of this would be a brand. I saw an example from Coca-Cola where they had, instead of including their intangible assets in the other non-current assets, they broke them out. And so instead of 59 point blah blah blah, let's say I had 19 there and 40 here. Now I'm still in balance. Just when I brought over the Edgar data from out here, instead of including that intangible assets in other non-current, just made a new line item for it. And that's perfectly fine. We can do that. We can forecast that new line item. But we do need to make sure that it's considered by the cash flow statement. So right now I'm in balance because I just took 40 out of other non-current assets and specified that it was a particular type of non-current asset, intangible assets. Makes a lot of sense for a company like Coca-Cola to have brands or trademarks, or Coca-Cola, maybe it's even the recipe. But let's say that the value of that went down the next year. My balance sheet shows the value going down, so my total assets went down from what they would have been if they were 40. But if the cash flow statement's not picking that up, the cash won't change accordingly. So if I had 40 here, I'd be in balance. But no reason to only be in balance if that's flat. Let me illustrate a little bit further by coming down here and calculating a ratio for the intangible assets. And let's say what it was historically really doesn't matter. Let's say I want that to increase by 2% each year. And then I'll use that to forecast the value of the intangible asset. Copy that to the right. So this is a reasonable expectation. We should be able to increase that account by a couple of percent each year by spending a little bit of cash to do so. But if we don't tell the cash flow statement that there's such a thing as intangible assets, then it won't know. Let's show the cash flow statement that we had in investing activities. So in addition to an increase in fixed assets at cost, we spent a little bit of money on additional brands. So let's call that increase in intangible assets and take the difference of, and since it's going to be negative, so any increase in this account means we spent a little bit of cash to increase the value of those intangible assets. This minus this. So we spent $800,000 to do that. And now we're back in balance because now the net cash from investing activities is hindered a little bit by the increase in that intangible assets. That brings our balance sheet back into balance and checks off number 6 on the list. So stop and think about why that works that way. Number 7 on the list, are our years correct on the statement of cash flows? Every semester I have to think back to, does this cash plug come from the end of the cash flow statement on the previous year or from the bottom of the current year? It's not intuitive to me until I stop and think about, well, the statement of cash flows added up all the sources and uses of cash this year. And so if I take the change to take the sum of all the sources and uses and add it to last year's cash, I get this year's cash. So it's this year's cash here in column F, or year 2021, that needs to drive my cash plug. Quick way to check that, well, the quickest way is hit F2 and see if I'm in column F. The second quickest way is Alt-M P to see what precedes it, and that arrow is vertical, so it's coming from the same year. Another quick way is just to go C. So if I have a cell, let me get rid of that, Alt-M-A-A. If I have a cell that's simply looking at another cell, and I want to go see what that is, there is a shortcut called Control Left Square Bracket. Hard to say, easy to do because it's usually right up there next to your Enter key. And if I'll hit Control Left Square Bracket, it takes me to the cell that formula was referring to. Quick, easy way to get there and see if I got the right row. The quick, easy way to get back is hit F5. F5 is the shortcut to go to a certain cell. And look what it did for me. It automatically populated the cell I just came from. So I'll hit OK. So let's do that quickly. The shortcut is Control Square Bracket. The shortcut to get back is F5 Enter. And I can get back. So let's try that on some of these others. Working our way through the cash flow statement. Net income, which year does that come from? Well, that should be net income from this year. Let's see if it is. F28, looks like it is. Control Square Bracket. Yes, I got the right row and the right column. F5, Enter. Let's see if I went to the depreciation in the right place. Got my negative sign in there. F2, negative sign. So let's do Control Square Bracket. That's the depreciation I'm looking for. F5, Enter. Got me right back. And here we could do this when I do Control Left Bracket, Left Square Bracket. It's actually going to select both of those as if I'd held down the Control key and selected them both. So Control Left Square Bracket and then F5 Enter to go back. And we could keep doing this, Control Left Square Bracket, F5 Enter to go back. Now here if I did a Control Left Square Bracket, it literally selects the cells that go into this formula. And often I don't want to do that. Often F2 is the easiest way to do it. Sometimes Alt-M-P for precedence is the easiest way to do it. But sometimes Control Left Square Bracket is the easiest way to analyze that. In fact, if I look down here at step 10, we've got those. F2 is a great tool. Formulas, trace precedence, or trace dependence are great tools. Control and Square Bracket is a great tool, and then I can use F5 Enter to go back to where I just came from. So we already checked off number 10 on the list. Let's finish talking about number 7. We checked that our net income and depreciation were coming from the same year. We could similarly check that the dividends are coming from the same year, where we're calculating cash. When we calculate our changes in balance sheet, we need to make sure we're taking the same year minus the previous year. So a change in a balance sheet asset like this, Alt-M-P, you need to make sure we're taking the same year minus the previous year. The beginning cash amount on the cash flow must come from the previous year on the balance sheet. So down here at the bottom of the balance sheet, this must come from the previous cash flow. So Alt-M-P for precedent. Another thing you can do is double click on that blue arrow and make sure that that's the previous year's cash flow. And as I said at the beginning of number 7, the cash plug on the balance sheet must come from the same year on the cash flow statement. Not always intuitive. Okay, let's move on and talk about the direction of changes in the cash. And when I say change in cash, I'll just use the Greek letter delta for change in cash. If an asset account is increasing, then that change in cash should be negative. I had to spend money to put inventory in the warehouse. If you think about it, every single asset account is a use of cash when it increases, but every single liabilities and equities is a source of cash when it increases. And so if my accounts payable went up, then that really just means I hung on to some cash that I should have used to pay my bills. so a source of cash when that accounts payable went up. The fourth bullet under 8 is depreciation, and since it's a non-cash expense that reduced our net income, then we need our change in cash to be positive to reverse it. And remember, different models may on the income statement show depreciation as an outflow, which gets added in, or show it as a positive number, which needs to be subtracted out. I like to show it as a negative, but depending on your convention, sign may change. On the other hand, dividends are actually a use of cash. So if we had a negative dividend number on the income statement, indicating an outflow of payment of dividends to our shareholders, then the change in cash really is negative to reflect that. And now let's talk about step 9. It's just carrying these concepts forward and talking about the math to do so. So our changes in assets, where the change is positive, showing a use of cash, we need that negative sign in front of the parentheses. The sources of cash on the other side of the balance sheet, where that change is positive, we want to show that as a source of cash, so no negative sign. But if you look at how I do these, often I just leave out the parentheses, and that's just plain wrong. So to have a negative change, we have to have those parentheses in there. So that's probably my most common mistake, really. And then the fourth bullet point is, does our net cash flow from all activities equal the net cash flow from all activities? In other words, does this properly sum up the 3 lines above it? That's a common mistake. And then finally, does our ending cash equal that net cash flow from all activities plus the beginning cash? Simple enough math, but one place that I also see some mistakes. And since I've already covered these tools, that addresses all 10 points that I think are most important to help you balance your balance sheet and flow your cash flows.